cpsi, NASDAQ, stock exchange, computer programs and systems. All right, let's get right down to it. I'm on my monthly candle chart, applying my classic chart trading framework. For what? Well, I just want to see if I'm going to be wasting my time on the shorter frames. Top to bottom approach, guys, is higher time frame, and then you drill down monthly, weekly, daily, if you go all the way down there. If all three are in harmony, then it's a screaming stock saying, play me. And that's why you start with a monthly. You could have a signal on the weekly, and let's say you just start on the weekly. I think you're wasting your time just starting on the weekly and then going on the monthly. Because if you start on the weekly, it has less value of the monthly. So you're spending time to actually analyze something. Hopefully you're not getting emotionally involved, but you could say, there's a breakout on the weekly, etc. And then, well, you hold your breath, say, okay, I'll go on the monthly, but you're still afraid that the monthly is going to contradict whatever you found on the weekly, right? That super duper stock that you really want to play. And then you're biased, emotional landmines while you're analyzing the monthly, the higher trend. It's like it's not the correct order. Start with the most important one. Eliminate. It's like that 80-20 rule. Which ones are the easy ones to do? Do those. Of the 20% left, which ones are the easy ones to do? Do 80% of those. And after that, you have almost nothing left. And monthly is the same thing. Monthly is a higher prevailing trend. So if you don't have a breakout on there, or you at least identify your resistance, monthly defined resistance, you know what you're dealing with. If you have a downtrend, a breakdown on the monthly, and then for some reason you see a breakout on the weekly, you're just gonna dismiss it. You're not gonna play that at all. It has more value. The breakouts and breakdowns on the monthly have more value. So play on the monthly, and after that, drill down to whatever time frame for that fine tuning, that precision entry. Okay, Pat. So right here, I have monthly defined resistance at the 3340 level. Put a little close to that. I have support, monthly defined support around the 2930 level. Remember, these are monthly candles. I even have this 1, 2, 3, 4, 5, 6, 7, 8-month consolidation, tight between 29.10 and 30. When you have 8 to 10% range, when they have a breakout of those rectangles of 8 to 10% ranging, then it's triple the target. And it's probably attained it here, running into the resistance here at around 33.35, 33.40. And right now, could have some consolidation here and maybe a breakout. What would be the measured move? Patrick, you have way too much imagination. There, here would be the measured move, would be up to here. Dude, did I do that right? Let me zoom in. Expand. Use your chart to its full potential. There you go. Let's get a little better position right there. There you go. Okay, so that's it. That's how I see the monthly candle chart. There could be a bearish or downward scenario. Well, we're not there yet. The price action is closer to the breakout than the breakdown at 33.40. And we did have a breakout here at this level, 33.30, but we've already attained its target. So right now we don't know what's going to happen. Either resistance, bounce back here, consolidation some more. Could even go down here, test. If If you enter now, you could get trapped. So you don't want to do anything right now. You just want to know that that level is 3340, and that's your monthly defined breakout. All right, let's go on to Stan. So many lines. Wow, look at that. See, that's that 8-month consolidation there we've been seeing. It's right here. A lot of overhead resistance. Remember, red cloud is the Ichimoku resistance defined. And green cloud is Ichimoku support defined. And right now, the more you move in a stage 1 or 3, that cloud gets thinner and thinner. So if you break up or down, there's not much because you've actually really consolidated a long time. And it's kind of fun. It overlaps. People say tight rectangles, or when they break out, they explode. Well, and the longer they are, the bigger the base, the higher in space, etc. All these models, stuff people say, well, that's why I never judge somebody whatever TA he uses. Because right here, Ichimoku cloud, see, it's thin. So over time, you see the resistance evaporate, the support evaporate, the supply and the demand evaporate. And then when you break out or break down, there's no close by resistance or support. Like Stan always says, if you have a breakout, make sure you don't have any close overhead support. So here's a price action. Let's look at those candles. This one's top. Oh, this one. We have a winner. Almost. So right here, that candle, 566,000. What about these small ones here? $290, yeah. So this is close to double the average of the previous 4 to 5 weeks. What did this candle? What happened to that candle? This one right here. Breakout above a horizontal breakout line. Check. This one here above the Ichimoku cloud. That's not a stand. It's a technique or a recommendation I got from Isa Trader on sageanalysis.net, and I'm kind of fond of it. Sometimes I try new stuff and I find reasons not to use it anymore, but it's been sticking around. Check. Above that, 30-week moving average going up. Check. Volume check. RSI. I don't have the Mansfield. Wish I had that, man. It's like I'm playing stand, but with missing an arm. The Mansfield indicator, I just have the RSI. Mansfield being the performance of the stock relative to the index it's in, and RSI is just performance of the stock versus itself. Still not bad. When I see it going above halfway territory, going upwards, for that candle, see it's that dot here. It's at 60 going upwards. It's awesome. Right here. So it's actually broke out right here, guys. Right here on the weekly. So let's go. What candle is that? That's the week of May, the 7th to 11th. And let's go back on the monthly. Zoom. It's that candle here. See? So actually here, broke out. That's a crazy monthly candle of that pattern. On stand, it's a breakout. So what I've noticed now, what happens with these breakouts that make bigger patterns. Is that, let's zoom in. So it's going to start making a bigger pattern, and 3340 level, since it's a monthly defined resistance, you might have a pullback here. And ideally, to the moon, we get a pullback around that 33 area. Even I'm going to put an alert a little higher just to trap it. And anything here between, let's say, 3390 and 3330, any pullback I get in that zone, when that gets triggered, I'm going to look at the volume on the weekly. Back on the weekly. Right here. Any pullback in that zone. You see the green is support, so it might not even get down to 3330. Anything here, 33.80. If it goes back on low volume, look at these crazy. Patrick, too many lines. There you go. So maybe you're going to go up here. And then remember, 1 to 3 months. Within 1 to 3 months after breakout, that's when you usually have the pullback. It's the hardest part, man. You go in the stock, and right away you kind of judge yourself on the next day if it went up or down, and you get all upset because it didn't go in your direction. And then you're mad, guys. 1 or 2 days, that is noise. That is nothing. That's what's great about Stan. At least he's dealing with weekly candles, man. At least it attenuates some of that noise. There's still noise on the weekly, but a lot less than on daily, guys. So don't get. See, the price action was down here during, like, for this candle during that week, and then price action went all the way back up. If you let yourself influence or humor, your humor is affected and your behavior is affected because one day it went down here and you judge yourself. Look, take a step back. You have the framework. You know it. You study it. You've watched Secretwars, my podcasts. You know what you're doing. StageAnalysis.net, whatever. You've practiced with using small amount of your NAV, not risking more than 0.25% of your NAV each trade. You know what to look for, contracting volume on those red candles, on those pullbacks. Here, this is what I want to see. I want to see a pullback, guys. I want to see one because I want to get in. At this place right now, I'm not going to get in. If I could get in, I need another breakout above that resistance, 33.40 on the monthly candle chart. And then I could play it with my classic chart trading framework, giving me that target all the way up here. Else, if I want to play it at la Stan, I want that pullback back to that breakout level on contracting volume, and then put my buy order there. I have that resistance turn support, which is my barrier to increase my chances of not getting whipsawed, and have the confirmation that was on low volume, not a lot of dumping or whatever reason. I don't know why it goes on low volume, but low volume is a symptom of a stock that's going to continue its uptrend after it hits resistance, support. And that's about it, guys. Anchor that into your thought, anticipate the move, and you'll be set. You could always enter here, but look, then after that, it's emotional landmines. 1 week, 2 weeks. Oh, close to here. Long candle above, pulls back down. 2 weeks, 3 weeks, 4 weeks, 5 weeks, 1 month, 2 months, up to 3 months. You're going to stay in the stock 2 months, seeing it drain. You could do it. I'm really edging to playing pullbacks now. Unless I get it, the first candle, if I see it like this. And that's why I'm never afraid of leaving money on the table, or I think FOMO is the expression. There's jargon, and I'm a dinosaur. There's a bunch of jargon I don't know. It's ridiculous. Fear of leaving money on the table. That is just crazy. Write the word fear. As soon as you have that word fear, greed, take a step back. You shouldn't have that in your dictionary. You shouldn't. There's other trades. You have options. You could play on the monthly candle chart, anticipate the breakout. It's monthly candles. You have 30 days. It's hard to miss those candles. And if you do, then you could play on the pullbacks on the weekly, contracting volume, then get in. So let's say it would pull back here. The investor's way, I would put my sell stop right here below that wick, below round number. And that's how far I would do it. Entry here. Sell stop here. And that's it. After that, I start moving my sell stop. Every time it pulls back, goes up, back to previous high, move my sell stop under that. If you're the trader's way, investors, below 30-week moving average, below that pullback, that V, etc. Look at all my early Secretwars episodes. I go in great detail. They're long, but I go through charts and going back, stage 4 breakdowns, stage 2 breakouts, how to move the sell stops, how to use the trend lines to exit, to maximize the ride. It's all there. But right now, I'm just focusing on breakouts or breakdowns, how to buy on the pullback, and starting with monthly candle charts to confirm if you can have the wind on your side or not. All right, guys, cpsi looks good. just wait for that monthly candle close. If you have one above 33.40, then you could play it with using my classic chart trading framework, or just put your alerts like I just did here and anticipate the pullback, and you'll be one step ahead. When all the holders here panic and they start selling around here because they think they're going to lose everything, hit their sell stop, that's when you enter, that's when you buy, and less resistance to go upwards, guys. All right, guys, that's it. See ya.